It's coming. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, a major shock is about to hit stocks, and we're going to show you what you need to know. Plus, we've got an update on where we think equities, bonds, gold, and the dollar are headed, and a bonus for today's show. Many of you have been asking and saying, hey, there's this one security, it's taking a massive drop in price. We want to know what you think of it, where the buying points are, what your reports show. We've got that added to the show today, along with all the machine positioning. Now let's head over to Goldman, where we kicked today's show off, and we're going back to last week. There wasn't a lot of updates from them, but there's one critical thing that we need to remember, that we're entering the best seasonal period of the year for U.S. equities. The first 15 days of July have been the best 2-week trading periods. July 17 is when equities start to fade. Now, before you look at your calendar, that is next Monday. So this is kind of the last big week historically for a push for stocks. Now, when you hear it says momentum starts to fade, what does that also tell you is following with it? Well, if you said the machines, you got it. Remember, they're trend following. So when momentum in the market heads to the downside, well, the machines turn to sellers. And so here we have, again, we're going back to last week. There's no update. Typically, this is pretty normal on a holiday week. A lot of money managers, a lot of hedge funds, a lot of investment banks, they don't put out a whole lot of data. So here we are looking kind of at the next month. So we're now kind of the first week into this report. And what do we see in a flat tape? If stocks go nowhere, which we're starting to see that already happen, $24 billion to sell global equities, only a little bit to buy in the S&P. So we noted that kind of last week there was a little push higher in the S&P. There could be entirely due to machine positioning. In an uptape, well, there's a big buying in global equities yet to happen. Right now, doesn't appear to be that's the case. If there's a down move, these machines are big sellers. Look at these key pivot points. Now, these have moved up, so we can assume the short term is now closer to 4,300. Every day, these positions, these pivot points, they move up. And all that means is, think of it like a stop loss for your portfolio. These machines are moving up their trigger point, and when they hit them, then they start to move to protect the downside, selling off positions. Again, always on the show, we always recommend people trade with stop losses, and you can see the machines do it effectively very well. Let's head over to TD Securities here. Notably now, they have bought all the way in. We've mentioned this was going to happen. They have done that now, under 4,300 to sell, so very similar to what you see with Goldman, and with the S&P hovering right around 4,400 as of Friday's close. You can see there's some margin for error there. So the machines are going to be holding their position, but if momentum wanes, those trigger points go higher, 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 and next thing you know, that's where you get that kind of mid-month in that recent Goldman report that says they could be big sellers here, and then if stocks go even further down, they could be major sellers. Let's take a look at our screens here. We've got momentum positive on the S&P. What do we know? The RSI, it's above 40. That means momentum on the relative strength index is good. That's 58. It's slowing a bit. MACD just pulled a negative cross. Momentum Timer Pro. Now this looks at multiple different technical signals. That's the one on the bottom here, and smooths them all out because, you know, following one is not usually the best. And now it's got 29 consecutive daily buy signals. You can see that here. It's maxed out on the 1-month window, so looking at 21 trading days. Here you see the 3-month window. Of course, that is going to be about 63 trading days maxed out, and the 6-month window just maxed out. So looking at all kind of different phases of the market, you see momentum is at extreme levels. Now that's important to know because it doesn't mean that stocks can't go higher here. There's just a point where momentum hits kind of its extreme levels. You start to look for reversal, and if you're not a short seller, then again, all this is telling you is start looking at places to pull profits or raise your stop losses so you don't lose out on your gains here. We flagged a buy at open on March 30th. We're still holding that. We keep suggesting you tighten up your stops here. Upside target, we're holding that at 450.6. Next downside target, I've moved that lower here. Now, our machine positioning kind of just looks just like Goldman's and TD Securities. This report here is also linked in the description. This one's $30 a month. And of course, Momentum Timer Pro is part of the Markets Insider Pro bundle for now. In a couple months, that's going to change. But notably, we've been positioned long long before these other machines, and that is critical. Let's go take a look at the charts here, because what we can see is CTA-Timer Pro was telling people to buy in right back down in here on the S&P. It told them to buy this pullback right in around in here and said to buy it again here. So if you're looking at your other reports and they're not giving you the right signals, check it out. It's $30 a month. Link in the description below. 30-day money back guarantee. Try it. If you don't like it, no big deal. But what we can see here is you see this beautiful inverted head and shoulders. Here's your left shoulder. Here's your head. Here's your right shoulder. Here's another left shoulder. Here's another right shoulder. Here's your neckline. You can measure this if you like using rulers on your screen. It tells you its price is headed somewhere up here. We've been noting 450 is our next target. Why is that? Because that's where sellers have been before. You can see they moved up into that zone and have sold there. That's our next target. Realistically, I think we could possibly get as high as 470, but as we kind of noted here, one of the challenges is momentum in kind of mid-July historically starts to fade out. What's the other catalyst here is the corporate share buyback blackout window is in full effect. That doesn't come off until sometime next month. We'll update you on when that is likely to happen, when we have more data. But here you can see the MACD rolling over and slowing down. RSI kind of just slowing off a little bit of oversold or overbought territory. Let me get that right. Doesn't mean it can't go higher, but I still think the market does. Let's take a look at, of course, now tech stocks and see where we think they're headed. And the QQQ momentum remained positive as well. RSI is at 60, so pulling off overbought territory. MACD rolling over, slowing down, negative cross. Look at this, 43 consecutive daily buy signals, and it's maxed out. I mean, the 1, 3, 6 month window. Again, this telling you at some point there's going to be a reversal here, even if it's just a correction that gets very likely. We're also holding our buy at open on March 30th, 315. Friday's closing 366, upside going to 380. Downside 347. Let's take a look at where we think QQQ. By the way, S&P downside target is the neckline. Let's look at QQQ. Downside target here right around 340, the top of the supply zone. So I wouldn't be surprised if we do see just a slight correction down in price. If that holds, rally on up into perhaps the 400s. But in the meantime, 380 seems to be kind of where I'm targeting. A little bit chunk of volume there, but we've seen sellers at that level in the past. Again, MACD, if you trade the MACD only, you're out of this trade. I still think it goes a little bit higher, but we'll see over the next week. Now let's take a look at bonds. No updates, but from Goldman, but we do know that if bonds did not rally, and what did we hear from them over the last couple weeks? If bonds don't rally, the machines are going to sell. We saw this kind of big flurry of pre-market selling last week, driving bond prices lower, interest rates up, and now what are we starting to see? Perhaps we'll go and look a bottom, another opportunistic bottom for me here in bonds. Let's take a look at what the TD securities now. Look, they're no longer sellers here. They are maxed out. They have exited their position. They're all the way to the short side. No possible further selling from them. Under 3.8% on the 10-year to buy. So again, that's pretty important. We've been talking about the rectangle pattern here as a reversal. I want to look a little deeper in that because it looks like a lot very similar to a Wyckoff bottom. And so if you're not familiar with this, I suggest you go take a look and find there's a lot of free research on it. And what we can know, and what I've been kind of wondering is if we've been seeing this kind of creek pattern here where you have this bounce between this upper bound and lower bound forming the rectangle, and then you kind of have this slow pattern heading down called the creek, and then you get a plunge in price. So I thought maybe we already saw it, but I think we're seeing that now. If that's true, we should get a counter trend rally, another sell down before this thing springs higher. Momentum remains negative. The RSI is now in oversold territory. MACD negative cross. Momentum Timer Pro picking up 3 consecutive daily sell signals. We're still holding our March 20 buy it open. And you say, why would you do that? Well, it's really simple. Why? Because we're up on the other 2 positions. So if we know that we're potentially seeing a bottom here, we would not be unlikely we would want to sell it. Perhaps this is where if you did have some stop losses, you might want to adjust them. Maybe you stopped out or put them underneath there just in case. But we'll make the case of why I think this thing is still going to bounce off of here. Downside target 96.08. I've revised that a little bit lower. You can see our machine positioning, which is far more accurate than, of course, what we see from the major investment banks, is saying that major investment banks have oversold their positions. Here we can see TLT moving down in a short position across the fast and the short algorithm. If you're looking at the report for the first time, this is a shorter wavelength than the other one. That's the difference. More money trades at longer signals. Here we can see even the one momentum still remains rather positive on this. So this is just 3 short days of rapid selling. Let's take a look at the price chart and see what we can find. All right, so you notice here we look at kind of at this Wyckoff pattern. We're seeing momentum now get down into oversold territory. On the RSI, we're seeing the MACD cross over. And notably looking at this 2-year chart, you see all the sellers are now down to 102. So what happened is we've seen the bulk of selling here at 106 and they sold down. Then they moved down. Then they moved down. So sellers are coming in at ever lower price points. And you'll notice, let's zoom in now to the 1 year. And what do you see? 3 really hard days of selling, and it's kind of come down here at the bottom. Now I moved this line down just because there's a little gap here, and as I thought about it, perhaps really more of the supply zone exists right in between these 2 points in here, and we'll kind of keep an eye on that. So I'm going to save this and see how it looks for next week. If this fails, the next downside target is all the way down here in the 96 range. Cover, there's a gap down here that gets kind of interesting. If this is the creek, this point right through here, if this is indeed a formation of that, then this makes that kind of last sell down. There could be a little more downward pressure. We'd want to see a bit of a rally up off of this, further selling, and then the spring out of that position. Again, I think bonds become the second half story for the markets that nobody is really taking any attention to. All right, let's take a look at the positioning for gold. We're still maintaining this is coming down. Now what I want to note is the selling below 1875. This number is moving up. So keep in mind, if gold doesn't go anywhere, the machines are going to catch this trend and start to sell. It's simply looking at it as a stop loss, buying above 1965. So again, no support from the machines to take gold higher, no support for them to take it down, but watch these levels. They're going to hit soon. Now we've seen a big triple top in gold that we have been warning. I still maintain it came down 100 an ounce as we called back for a while ago, and now we're looking at going down to 1820, and we'll see that here in a moment. Momentum still positive as the RSI is just above 40. MACD's got a positive cross, so this is a recent turn only on the last day. So Momentum Timer Pro picked up 1 consecutive buy signal on Friday, closing at 178.64. Upside target at 184.34. Downside target still remains the 200-day moving average. And notably, see our CTA report, it picked up that short-term move off of that short position, but the long-term picture says, hey, we're not buying it. So all you're seeing in the CTA report is it's validating that short-term move in the price chart. Let's take a look at where gold is headed next. Let's start with GLD. And what we said, the 200-day moving average is the next destination down here around 172.74. Upside target 184. You can notably, sellers are all above here. So if buyers come in, notably they're going to get rejected. So keep that in mind. You see this cross between the 50-day moving average and the 21-day in red. When you have a cross of a moving average to the downside and it reconfirms it. So here you see a 21-day, it's getting rejected. That is a bearish position. At some point, we figure it will hit maybe the 200-day moving average, make a short-term rally up to the 50-day. If it gets rejected there again, that is a bearish picture. Let's take a look at gold futures. Here we're sitting at 1930 as of close, right off our target of 1920. I expect this to oscillate a little bit between here. Break of 1920, you're coming down all the way down here to the next zone. That's 1820, another 100 ounce off of that. That would be a potential buying opportunity because here you have a left shoulder, a head, and a possible right shoulder then coming off if there are buyers there. So if you're looking to take a position in gold, you may want to hold off a little bit longer. All right, let's take a look at the miners. We had a double top on that, which we noted. Most people say is a reversal. It can be. Frequently, it's a continuation pattern, but there are times it is a reversal. Let's take a look at GDX. We have momentum range positive coming off over sold territory. Now RSI up to 41, so it's just momentum's just pulling up. MACD's got a little positive cross, notably over the last 1 day. We're not going to see no position on this. I'll show you why in a moment. If you're a short-term trader, maybe some opportunity here. Upside target at 31.81, downside target unchanged at 26.42. Look at our CTA report. See, it's showing the long-term position not moving, which is fine. There was that short-term position that's kind of picked up here. Same with Momentum Timer Pro. It's picked that up. No major moves. So let's go look at the price chart and see what I think. And here you can see some buyers are coming in right over here. You have the 1 year volume profile, very strong here. That means, of course, you've seen most of the shares traded here. You've got a cross of the 200-day moving average. It's been following the 21-day down. Potential short-term rally here. Bigger picture is you want to see it get down into this $26 price range. Again, here you have a left shoulder, a head, potential right shoulder rally. But you notice if we do get a head and shoulders pattern here, you come in around 20, high 26, you get a potential rally up to 32, makes for a very, very nice trade setup. So for the moment, I would hold on to that. That's why I'm calling for this to go down further. But a short-term move, look for that to maybe get up to the 50-day moving average, but don't go too crazy after that. All right, how about the dollar? Momentum is positive. I don't think for a lot longer. RSI has been coming down as the MACD's got a negative cross. Upside target still remains a 200-day moving average, which it did tag last week, so we were going to hold that position. But notably, remember our CTA report was completely short, and everyone said that's the end of the dollar. Then it reversed. I said, no, if it's maxed out short, it's going to counter rally. It did. It went max long, and now I'm saying, look, dollar's coming down. Sure enough, you see on the fast algorithm, it's selling down. On the slow algorithm, it's selling down. Momentum on Timer Pro starting to switch positions here. Let's take a look at the dollar, see what's going on. All right, UUP getting rejected here now at the 1 year volume profile. Sellers, that means we're seeing buying and selling dominating here. Looks like sellers are starting to win out as of Friday. The 200-day, as I've said, looks like it's a line of resistance. It is. Look for prices to come down as these moving averages converge. I think the downside target is, as we've said, is right around 27.63. I think it gets all the way down and retests this and break down. But look at the dollar index. Boy, this isn't pretty. You talk about dropping like a tennis ball. Drop it down, it bounces, doesn't have a lot of momentum. It comes down, bounces, less momentum, bounces, less momentum. Tells you eventually this thing's going flatline. It's going to hit the floor, and if it does, it breaks out, heads down. Let's zoom out to around 98 is the next move for the dollar to the downside. That, my friends, evidence of a slowing economy. All right, here's our bonus, platinum. Many people have been asking, Steve, what's going on with platinum? Keeps selling. Where's the big reversal? What do your charts say? What do your reports say? So here you got momentum negative. RSI massively oversold at 34. MACD's pulling up, positive cross. According to Momentum Timer Pro, 38 consecutive daily sell signals. So if you were a subscriber to this, and if you're looking to be a standalone subscriber in a few months, that will be available. What this would be is on your report to look for a reversal. This should be on it every day looking for one. Friday closing 84.40. We're going to say no position. We're going to give that call when we're ready. Upside target right now 86.60. Downside 78.60. Look at our CTA report validating what Momentum Timer Pro saying, max short. So if I was a subscriber to either or both reports, this would be on my hot list. And notably, we've been putting that out. We put out our weekend watch list and our midweek watch list. It's been on there for a while. That's why many of you are asking. So let's take a look at the charts. Let's see what's going on with platinum. And here we have it. So let's zoom out into the 10-year chart, and you can see it loves to find support down in the zone before you get down here into, what did we say, the 78.60. I'll show you that. Huge place of buying opportunity. But right at what's going on right now, let's zoom into the 5-year chart, and you can see there's been some buying kind of right above. This is key. Right above those two dashed lines is where I've got the supply zone. If that fails, it usually comes down. So let's zoom in a little further. to the 6 month. Whoops, that's too close. We need a little more data here. So notice how it came to the supply zone. Sellers came through. Some buyers are pushing back into the supply zone, and they're starting to get rejected here. If they do, now you're looking at moving back down into this lower zone. We said 78.60 is the target. So somewhere right down in this zone is where we'd be looking to take a position, where we'd be looking at our reports and saying, when do they cause that signal? Yes, you're getting some action here because it's oversold, but remember, just because things get oversold doesn't mean they can't go lower. We've seen that in the past. Here you see an oversold position. It rallied up and came back down. So it does not mean that this trade is being missed. It just means potentially a little early here, but I think it comes down into the 78 to 79 range. There's your major buying opportunity for platinum. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.